Okay, so like I said, there are various candlestick patterns. We have various candlestick patterns, and we'll start with the first pattern that I usually tell my students to know very well. It's called the Doji candlestick. Doji candlestick. So here in the Doji candlestick, Doji candlestick. In the Doji candlestick is whereby we have the opening price. The opening price and the closing price are the same. The opening price and the closing price and the closing price are the same, and or almost the same, or almost the same. So the opening price and the closing price are the same or almost the same. So the opening price can be the same with the closing price if at all something of this kind happens. We can have something like this. Okay, I needed something that could help me draw well, like a line. Let us see. Okay, so if you find something like this, then you find something like this. If you find something like that, then you find something like this. All right. So what that shows you here, first of all, is the fact that price opened here. After price opening there, we also had the same price closing there. So we have the same open and close of price at nearly the same level or at the same level, So this particular type of candlestick, it illustrates that neither the buyers or the sellers have gained control in the market. Because the reason as to why we say that either the buyers or the sellers have gained the control in the market is because price opened and closed at the same level. So if price opened and closed at the same level, that means that candlestick is not a representation of, it is a representation of neither the buyers nor the sellers. So it means none of them is in control, none of them is in control. So it can appear in different ways. It can appear actually in very many different ways, but I'll show you just a couple of ways in which they appear. Remember the names. If you know this is a doji, you don't need to cram all the other names of all the ways in which they appear, or all the representations and the dimensions in which they present themselves in. We can have that. It can represent itself this way. It can represent itself this way or this way. Or this way or this way, just the inverse of that. So that's also another doji, right? So you don't need to know the names into details. You just need to know the overall name, which is doji. So like I said, it is trying to illustrate what happened in the market at that specific period, and which means that at this specific period, neither the buyers or the sellers were in control. Remember, when we were talking about time frames, we talked about every single candlestick becoming a representation of that time frame it is in. If a candlestick is in a 1 hour time frame, it means one candlestick is an illustration of what happened in that particular hour. Or if it's in daily time frame, it means that candlestick in daily time frame is a representation of what happened that day. So if you find a candle in 1 second time frame, it is a representation of what happened in that particular second. If you find a candlestick in this in 5 minutes, it is a representation of what happened in the market in those particular 5-minute blocks. So all right, that's the first type of candlestick that we've handled. The second type of candlestick that we will handle is called the inside bar. The inside bar. But again, before we proceed to the inside bar, there's some things I feel like I'll want you to know. I'll want you to 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 uh, to grasp. When you see a candlestick pattern of the doji type, when you see the doji candlestick type, occurring, if you see the doji candlestick type occurring in an uptrend, for example, that is in an uptrend, it can be viewed as an indecision of the buying momentum. Maybe the buying momentum is slowing down, because if you see it in an uptrend, it means the buying momentum might be slowing down. The buying momentum might be slowing down, right? Let me give you an example of this trade I took in the morning. So this particular trade, let me try to present my screen. Are you seeing my trading view screen?
Yes.
Are you seeing trading view?
Yeah, yeah.
Okay, if you are seeing trading view, that is good. Let me share again. Sorry, if you see trading view, this means you can mute your mics. Whatever that is here, you know, this is an uptrend. Price is in an uptrend here. From here up to this level, price went to an uptrend. But then there was a doji candlestick formed here, as you can see. Always when you see a doji candlestick being formed, know that market is trying to reverse. You know, there is that doji candlestick formed in that illustrated by that blue circle. Are you seeing the blue circle eclipse? Kind of a circle. That is a representation of the doji candlestick. And that doji candlestick occurred in an uptrend. And like I said, if a doji candlestick occurs in an uptrend, that means there is an indecision in the market. The market is trying to analyze and see whether buyers or sellers are the ones that are strong. And whoever passes the strength scale will be taking is what price will be displaying. So in this case is in an uptrend, but then buyers have been in control. I hope you're seeing that blue eclipse that I've circled there. So buyers were in control. So once the buyers were in control, the sellers also started displaying certain strengths illustrated by that candlestick. So that indecision in price, and it's in an uptrend, might signify that price will tend to move lower. And as you can see, just with that alone, if you use that as a trading mechanism, which I advise you not to use as a trading mechanism wholly. Remember, candlesticks are just used for you to monitor patterns, but other things can be applied for you to start knowing how to trade and how to use the candlestick patterns to execute trades alongside with other methodologies and procedures. So on the uptrend, at the formation of the top of the uptrend, on the uptrend was a doji candlestick as illustrated. So somebody will say, okay, now that the doji candlestick has formed and there is indecision, and now that we have an uptrend, we can start going lower. We can start selling, and as you can see, using only that, one can have a setup like this one. And as you can see, somebody can sell here. I sold here alongside other factors to illustrate that price is going downwards. That is not the only doji candlestick in this setup. As you can see in this other setup here, in this other side, I will just draw. There is another doji candlestick there. All right, doji candlestick. So when it appears on the top of on the uptrend, it means that price will start going lower. And when you see, let's say you are holding a trade. Let's say you have a trade. You've been holding this trade from here. You've been holding this trade. You bought here, and price has been moving. Sorry. You bought here. And price has been moving higher and higher and higher to these levels. Then once you see a doji candlestick being formed, that is an illustration that you should start taking your profits, or you should start taking your partial profits. It's an illustration that you should start taking your profits, or you should start taking your partial profits, right? It's an illustration, right? The same applies in a downtrend. If a doji candlestick occurs in a downtrend, it means there is a possibility of a reversal. Let us see here. Regardless of the time frame, this applies regardless of the time frame. Look at this candlestick here to this point, right? Doji candlestick. That doji candlestick circled in blue occurred in a downtrend, in a downtrend, you know, in a kind of like a small downtrend. So that representation means price has started moving higher. And as you can see, price progressed higher and higher to these other levels, Okay. Yeah. As you can use candlesticks as basis of entry and exit of your trades, like I said. So up to this level, you see price reached this level, another doji was formed. It was an illustration that you can just now start doing what? Exiting your trade. You can start exiting your trade. And as you can see, like I said, it was in a downtrend, you know, downtrend. Another doji is here. Doji candlestick is here, you know, another doji candlestick is here. A lot of these doji candlesticks can be spotted, you know. But remember, one thing to note is that the market can be in a indecision mode for a brief moment, then continue to advance in the direction of the trend. So like in this case, there was a doji candlestick formed here. This was some indecision that took place here. There was some indecision that took place here. These two candlesticks. There was some indecision that took place here. But then that indecision was in an uptrend. So somebody would have said, because it's in an uptrend, I'll want to now start looking for sales. But you need to take caution, because that indecision might be for a brief moment, then the trend goes, the market goes to the preferred trend. Therefore, it is crucial to conduct thorough analysis before exiting or rather executing a trade using the doji candlestick patterns, right? Remember, I said that these patterns are not only restricted to, they're not the only ways for you to trade. They're not the only mechanisms you need to know for you to trade. You need to also employ other mechanisms, other analysis procedures. These candlestick patterns are just for you to spot structure. Don't use it as trading systems. People tend to use them as trading systems, but use them as a way of spotting structure, as a way of knowing structure, of knowing what the market is doing. Okay, use them as a way of doing that. Sawa. Let's proceed. Let us proceed to other candlestick patterns. Let us proceed to other candlestick patterns that are going to be helpful in our quest. So we, like I said, the names are not very important. The types, you just need to know that this is an doji, but you don't need to cram. Eventually, with practice, you'll get to know them further. So the next candlestick pattern we have is the inside bar. So the inside bar, I'll try to draw it here. The inside bar, we have what we call the inside bar. So the inside bar is illustrated with this one. Let's try this one. We have one mother candle. Then from that mother candle, then we will have a small candle being formed, regardless of whether that mother candle is bullish or bearish. So long as it's in the inside, so long as there's something following it, there's just one big candlestick, then another small one following it, will form an inside bar candlestick pattern, right? So the inside bar, it is the most common that you'll come across, you know. It is the most common. It's the most common that you'll come across in your charts, you know, and it's the one that is easily recognizable. So you need to understand the what it means and the limitations of this pattern, you know. This pattern implies that there is an indecision phase, you know. Okay, it illustrates that there was an indecision phase, you know. The inside bar can form in the middle or on the top of a trend. It forms anywhere, just like any other candlestick. It forms anywhere. So like I said, you shouldn't use these patterns as just a trading mechanism or methodology. Use them as a way of adding to your analysis, or rather to make entries later on. We'll learn that, right? Remember I said inside bar entails two candlesticks. One can be formed at the bottom, like this one. We can have, let me draw something here for you. We can have an inside bar being formed in the middle, like that one that you've seen. Then we're gonna have an inside bar being formed at the bottom like this. So that's, that way. So either way, it means that the top of the first candle and the bottom of the first candle have not been surpassed by the second candle. This pattern represents a pause or a consolidation in the market. It represents a pause or a consolidation in the market. It can be considered as a continuation signal in trending markets. Let us use that example. It can be considered as a continuation signal in trending markets. Trending markets. Let us look at this example. For example, let me use the 1 hour chart this time. It can be illustrated as a continuation, in trending markets. Let us see. We are in a bullish time frame here, right? We're in a bullish trend. Let me try to draw a trend line to show you what makes me say we are bullish. So we have this trend line here. Price is moving upwards. And I'm going to tell you that I said this one is the most common type of pattern, candlestick pattern. And I'll say this again and again, that it might be formed in the middle, in the end, anywhere in the trend. But mostly it's used for continuation purposes. It is used for continuation purposes. Continuation purposes. All right. It's used for continuation purposes. And I'll give you an example. Of an inside bar. I'll give you an example of an inside bar. I'm trying to look at the most efficient one. I'm trying to look for a couple of examples here and there. So first of all, we have this one. We have this one. Just follow my chart well. Just follow my cursor well. What the? My laptop is experiencing some issues. But let's try again. Let us try again. We have this bar. So we have like 10 minutes today. We'll talk about the rest as we proceed. Tomorrow's class. So we have this one. We have this one down here. That red candlestick and this black one. So the black one is a bullish candlestick. But then the first candle, the mother candle, is a red candlestick, which for me in my chart illustrates the bearish candlestick. But remember, the trend, like I was drawn to you, is a bullish trend. So the appearance of this candlestick here, the appearance and the formation of this candlestick here, for me means that the bulls have there will be the continuation of this trend. So there was the formation of the inside bar here, and then as you can see, price continued pushing upwards. Right? It continued pushing upwards. So I think we'll also look at what we call the pin bar. As we proceed, we'll look at what we call the pin bar. We will look at the pin bar. So we have the inside bar, like I've said. Then we'll have number 3, the pin bar. We'll only handle the doji, inside bar, and the pin bar. So we'll have the pin bar. The pin bar is just one candle. Pin bar is just one candle, it is just one candle. This is a candle whereby you have a longer wick than the body, with a longer wick. Than the body of the candle. You have a longer wick than the body. what do we do? How does it look like? It comes in different representations and dimensions. So we can have either this one, have this one. We can have, I hope we can have this one here. This is a pin bar, whereby you get the wick is longer than the body. You know, we have already talked about the wicks and the bodies. You know, we've talked about the wicks and the bodies. So in this case, this is called a bearish pin bar. This is a bearish pin bar. We have a bearish pin bar. Then again, apart from that, we have a bullish pin bar, which I'll be drawing shortly. We have a bullish pin bar. A bullish, we have a bullish pin bar. We have a bullish pin bar, which can be illustrated in this way, you know, that way. So that's that. We have a bearish pin bar. We have a bullish one, a bullish pin bar. That's that, bearish, bullish pin bar. All right. Like I said, these candlesticks have one half the wick or the shadows bigger than the body. Like I said, there are two types, bullish and bearish. And remember, the bullish pin bar is a reversal candle that occurs in the downtrend to illustrate a reverse of the candle of a trend. So if a bullish pin bar occurs in a downtrend, it means there is a likelihood of a reversal. If a bullish one occurs in a downtrend, it means there is a reversal upwards. And if a bearish occurs, it means there is reversal downwards. You know, you'll get to read further. I'll send materials on the same. Then we have what we call the okay. Before I go deeper, before I forget, it's actually you're lucky that I've remembered this one. Remember the pin bar. For those ones who've been trading for a long time, or when you get to trade or get further into trading, you realize that the pin bar is the kingpin of candlesticks, is one of the most important candlesticks. If you are to grasp, you are only to grasp one candlestick pattern, just grasp this one. It is one of the best, one of the major ones, and it is the king of price action. Is the king of price action, you know, because most of the setups that you'll get, most of the trades that you'll get, you know, you'll use the pin bar as a confirmation because of its high probability to get you entry points. Okay, so you need to know the pin bar very well. You know, for example, if you have a zone and you see price being rejected on that zone, or that being reflected on that zone, or that being rejected on that zone using the pin bar, that means you can have yourself a setup, you know. And I said it can be used as a reversal signal. I'll teach you how to use these types of candlestick patterns as we progress. So any questions? Today we are handling just two, just a few of them. We'll handle the rest as we progress. Any questions? Any questions? Excuse me. Any questions? Okay. Good. So, okay. Let's meet tomorrow. Let's meet tomorrow. Thank you so much for your time. And yeah, let's meet tomorrow.